The smart money is clearly starting to move in. That to me is the indication, one big indication of the start of a big move.
Imagine a future where silver isn't just your everyday commodity, but a precious metal valued at a staggering $1,000 per ounce. Sounds far-fetched? Well, with the latest market twists, Peter Krauth sees this as a near-future possibility. Stay tuned as we dive into the incredible insights that could turn the silver market on its head. And don't forget to hit that subscribe button to stay updated with the freshest insights in the markets, and of course, commodities.
Those are one of the, probably your viewers understand and know the best, is the gold-silver ratio. So I said, okay, if I'm going to look at where silver could go ultimately, what has it done in the past? Well, in 1980, when gold peaked and silver peaked, the ratio fell to somewhere around 14 or 15. At the time, gold was $800, silver was about $50. And the ratio, as I say, was, let's use 15. So I said, okay, if I look forward and I make my own projections, and I'm not the only one, by the way, and I detail this I provide lots of detail about this in the book, how I get to this, the fact that I'm not the only one. I believe some very, very, very smart, observers, researchers in the sector have forecasts for gold. And I went with 5,000. I think that's a realistic target. We're almost halfway there at this point. So I don't see 5,000 as the biggest stretch in this bull market. In any case, if you use a $5,000 gold target and you say 15 to 1, you're at $333 silver. So to me, not a stretch. If you use, and I think it's probably perhaps more realistic, ultimately, perhaps say we go to, and again, I'm not the only one, some very savvy, very accomplished, very well-respected analysts, it's all in the book, have reached $10,000 as a target for gold. And if you do perhaps say $10,000 and you use a more conservative gold-silver ratio of say 30 instead of 15, you're still at $333 for silver. So that's the gold-silver ratio. If you look at, for example, in 1980, when silver peaked, you look at the silver price versus, let's say, the average home price. So at that point, when silver peaked, it took just shy of about 1,500 ounces of silver to buy the average U.S. home. If you go with today's numbers, the average U.S. home costs about $500,000, let's say, make it even easy round numbers. If you use that same ratio, you're looking at, again, right around, I believe it was $333 silver. So by that measure, again, you're at over $300 in silver. If I look at the inflation rate, and, officially we're at, say, 3%. If you look at where we've been for the last several decades, it's probably averaged about somewhere around 3, maybe 4. But more realistically, and everybody in their daily lives will tell you that they're not comfortable with those numbers. They don't feel that they represent what people actually have to deal with and live with. And there's a fantastic research service called Shadow Stats that calculates, in fact, inflation the way it was back in the 1980s. And they have inflation running at more like 7 or 8% for the last, say, 40 or 50 years. So if you project using inflation rates that are more realistic, again, you get a peak in silver much closer to about $300. So I think I'm being quite reasonable. And I also say that to get to that peak, we're going to be in some kind of a mania phase. I'm not saying silver's going to steadily to $300 and it's going to stay there or it's going to keep climbing. I'm saying, ultimate crazy FOMO mania.
First up, let's dive deep into the swirling currents of the silver market to understand why there's a buzz about it potentially skyrocketing. Recently, silver touched a 3-week high at $28.74, only to retreat slightly under the pressure of rising U.S. Treasury yields and a strengthening dollar. Now, while these might seem like setbacks, the underlying market dynamics tell a slightly different story, a story of potential and optimism among investors and market analysts alike. The technical landscape, for instance, shows a shooting star pattern, often seen as a bearish signal, but look closer. This pattern emerges just as the Relative Strength Index, or RSI, which measures market momentum, remains in a bullish zone between 60 to 70. However, the slope of the RSI is tipping downwards, suggesting some immediate bearish bias. Despite this, the overall momentum still leans in favor of the bulls, hinting that once the current retracement finds its footing, an upward trajectory might resume with renewed vigor. But what could push silver from its current levels to resume an uptrend? For that, the market would need to break through some key resistance levels. The immediate resistance is at the recent week high of $28.76. A breach here, and silver could test the $29 mark next. If it manages to surpass this, then the year-to-date high of $29.79 could be within reach. Surpassing these levels could ignite the engines for a more robust rally. On the flip side, let's not overlook the support levels which play a critical role in sustaining prices during pullbacks. There's significant support at the psychological $28 level. If this holds, it acts as a springboard for the price, but if it breaks, we might see a dip towards the 38.2% Fibonacci retracement level at $27.70. Such movements are crucial for traders who are constantly adjusting their positions based on these technical indicators. Furthermore, external economic factors also sway silver prices. Consider the U.S. Treasury yields. A rise in yields often boosts the dollar, making dollar-priced commodities like silver more expensive for holders of other currencies, thus dampening demand. However, the broader economic outlook, including expectations of rate cuts by the Federal Reserve later this year, paints a bullish picture for non-yielding assets like silver. Lower interest rates decrease the opportunity cost of holding non-yielding assets, making silver an attractive investment. In essence, while the immediate technical signals suggest a cautious approach due to potential pullbacks, the medium to long-term outlook for silver remains bullish. Investors are advised to keep a close eye on these levels and market developments, as these will dictate the silver market's direction in the coming weeks. So why should this matter to you? Whether you're an investor, a market enthusiast, or just curious about the dynamics of commodities like silver, understanding these fluctuations and their underlying causes can help you make informed decisions. It's not just about watching prices rise and fall. It's about grasping the why and how behind these movements, setting the stage for strategic decisions that could be quite profitable under the right conditions. Stay with us as we continue to unpack more factors influencing silver prices and potentially paving the way for Peter Krauth's bold $1,000 per ounce prediction.
Concerning where are we going to get new silver from? Great question. There aren't that many places that you can actually find silver. If you look at the Americas, it tends to be focused on sort of the West Coast. So you see whether it's Canada, the US, all along sort of these mountain ranges is where you tend to see concentrations of silver. In South America, it's the same thing, mostly along the Sierra Madre, the Andes, and so on. There is a potential that we're going to see more silver come out of places perhaps like Australia, perhaps even Europe. There is a lot of silver that comes out of Poland. There is one sort of smallish potential project that I see in Germany, for example. That's a long ways off. There is a project in, I believe it's Serbia, that's starting to come online. There's a large producer, a relatively large producer out of Morocco. That's a place I think we need to watch carefully. That's Aya Gold and Silver. They're actually in the midst of a big expansion that's going to take their production from 2 million ounces to 8 million ounces. Now, that's fantastic for Aya and for Aya investors, but it's going to do very little to impact supply. And I was actually talking to a silver researcher this morning and talking about the whole sort of demand supply aspect of the market. And really, there are constantly new mines coming into production. The fact is that there are also regularly mines going off production. Either they've reached the end of their lives, or there are some sort of geopolitical issues. They could be not profitable. The mining company decides there are some serious challenges. There was a interesting bit of research from Bank of America a little while back that they went and looked at the 13 largest primary silver mining companies, asked them where they thought silver mine supply was going to be over the next couple of years. And they all said on average, it's going to be flat for the next at least 2 to 3 years. It peaked at 900 million ounces in 2016. They expect we're going to be about 800 million ounces over the next, per year over the next couple of years, which is just incredible when you think of how demand has just been ballooning and the deficits that we've been living through each year for the last 4 years have been sustained, and the Silver Institute thinks those will continue to be sustained. So, I mean, we can talk about that a little bit too. There are structural deficits. Why is the silver price sort of capped, if you wish, if we're facing deficits? And I've spent some time doing some research and some digging, and I think I know what is affecting the market this way. What we've seen in the last couple of weeks, it looks like it may actually be starting to reverse, but there are some really specific things I think that have led to where we are right now.
Next, we'll explore the critical role of inflation data in shaping market expectations. Upcoming CPI and PPI reports are anticipated to shed light on future Federal Reserve actions, which could dramatically influence silver's trajectory. Why is this important? Inflation is a key driver in the valuation of non-yielding assets like silver. When inflation rates are high, the real return on bonds decreases, making silver, which doesn't offer yield but does provide a potential hedge against inflation, more attractive. So let's break down the anticipation surrounding these reports. The Consumer Price Index, CPI, and the Producer Price Index, PPI, are pivotal in understanding whether the inflation is transitory or if it has more enduring qualities. Analysts predict a mild deceleration in the CPI, suggesting a slower inflation rate that might still persist, indicating ongoing price pressures. Such an environment would typically bolster the appeal of precious metals as safeguard investments. Furthermore, mixed views from Federal Reserve officials on the current interest rates, whether they suffice to curb inflation or not, add another layer of complexity. Some Fed members argue that rates should hold steady, suggesting they believe current policy is sufficient to manage inflation. Others hint at the need for rates to drop, aiming to stimulate economic activity further. If interest rates drop, expect non-yielding assets like silver to potentially rise in appeal, as lower rates diminish the opportunity costs associated with holding such assets. Moreover, let's consider the market's reaction to these reports. If the data points to stronger than expected inflation, the market might start pricing in a more aggressive rate-cutting strategy from the Fed. This could weaken the dollar, making silver cheaper for investors holding other currencies and potentially pushing up silver prices. Additionally, the Treasury yields, which have a reciprocal relationship with precious metal prices, also deserve our attention. A decline in yields, as we've seen recently, typically supports higher silver prices. Investors shift their focus from yield-bearing assets to more secure harbors, like silver, during times of uncertainty and low yields. As we gear up for these reports, the strategy for silver investors should be one of vigilance and readiness to act on the insights these inflation indicators provide. The interplay of inflation data, Fed policy expectations, and Treasury yields could create a perfect storm for silver's ascent, aligning with Peter Krauth's audacious prediction. In our next segment, we will delve deeper into the Federal Reserve's mixed signals and the broader economic indicators that are currently at play, further unraveling how these elements could forge a path for silver to reach unprecedented heights. Stick around as we connect these dots, providing you with comprehensive insights to navigate the complexities of the silver market.
So, if you're looking at the silver market, really, if you're not paying attention to what's happening in solar in particular, then you're really missing, I would say, probably the biggest single driver other than investment demand, because solar has really become what I call sort of the 800-pound gorilla in the market. It went from few tens of millions of ounces maybe a decade ago to over 200 million ounces next year. That's what the forecast is. We were at nearly 190 or so million ounces in 2023. And so industrial has become more than half of the silver market in terms of demand, and solar represents something like 30% of just industrial. So solar at 200 million ounces is 20% of the entire silver market every year, right, which is roughly about 1 billion ounces. So you've got to watch what's happening in solar. And the fact is that solar capacity is being built out dramatically, led by the Chinese. About 80% of the market is China in terms of manufacturing. And solar demand, so sales of these panels, has also been beating forecasts dramatically. Now, if you take sort of I think, a reasonably even conservative view of solar, and you say to yourself, all right, so there's been all this capacity. What if there's some sort of recession, things slow down, and there's less demand for solar, and solar kind of plateaus, and building out of the solar economy in the solar sector starts to plateau, you are still going to get a lot of demand of silver in from the solar sector, just because we are transitioning to new technologies. So the, I guess, incumbent technology is what we would call PERC. It's about half of manufacturing capacity right now. About 3 or 4 years ago, the next two technologies that, by the way, require from 50 to 150% more silver per panel. These were about 10% of manufacturing capacity. Last year, combined, they were already 35%. The Silver Institute thinks that the next generation, which is 50% more silver per panel, is going to already represent 50% of new manufacturing capacity this year alone. So even if we plateau in in solar manufacturing capacity, the fact is that we're moving to technologies that require more silver. So that is going to continue to feed the demand of silver from the solar industry.
Now let's discuss the broader economic indicators and the Federal Reserve's stance, which are pivotal in shaping the trajectory of silver prices. With the Federal Reserve at a crossroads regarding monetary policy, understanding their perspective and potential decisions is crucial for any investor watching the silver markets. The Federal Reserve's mixed signals on interest rates are particularly noteworthy. While some officials believe the current rates are sufficient to control inflation, others suggest a more dovish approach, advocating for rate cuts to stimulate the economy. This divergence in opinions adds an element of unpredictability to the markets. Lower interest rates typically decrease the opportunity cost of holding non-yielding assets like silver, making it more attractive as an investment. Moreover, economic indicators such as employment rates and payroll data are also crucial. Recent reports showing weaker than expected U.S. payroll data signal potential softness in the labor market, which could prompt the Fed to consider easing monetary policies sooner than expected. This scenario would likely be bullish for silver, as investors often turn to precious metals during times of economic uncertainty as a safe haven. Additionally, let's consider the global economic landscape, which also influences the Fed's decisions. Issues like international trade tensions, geopolitical risks, and other macroeconomic factors can sway the Fed's policy direction. For instance, heightened tensions or economic slowdowns abroad could lead to a more cautious approach domestically, affecting silver prices by altering investor sentiment and behaviors. Investor sentiment is another critical factor influenced by the Fed's communications. When the Fed signals a possible change in policy, it can cause significant market movements. Investors and traders closely monitor statements from Fed officials, and their interpretations can lead to quick shifts in market dynamics. For silver, this means that any indication of a dovish turn by the Fed could lead to an increase in prices as investors anticipate lower rates and higher inflation risks. In our next segment, we'll dive deeper into the technical analysis of silver's price movements, examining key resistance and support levels that could indicate future trends. This will include a detailed look at how traders react to these levels and the strategies they might employ based on anticipated Fed actions and economic reports. Stay with us as we continue to peel back the layers of complexity in the silver market, providing you with the insights needed to understand not just what is happening, but why it's happening and how you can potentially benefit from these movements. Remember, in the world of commodities, being forearmed with information is as good as forecasting the future itself.
Interesting stuff. I'm curious, what are the implications of a market where these contracts can't be fulfilled with delivery?
So that's what I'm wondering about myself and
Sounds like, what do you do?
Yeah, I mean, I think that's going to be some sort of chaos. I think that you're going to have a big consumer of silver stand for delivery. I think these markets were not really meant for that, but this is, as I say, based on what I can tell, how a lot of the industrial users are actually getting some of their silver. This is where they're getting it. And all it takes is for one big consumer to go to the market, hold a long contract, say, okay, it's expired. Now I want my silver. And for the exchange to say, oops, sorry, we're out of silver. We're going to have to pay you out in cash. And they're going to say, no, I want the silver. I don't want the cash. And they'll say, sorry, force majeure, no more silver left. Here's the cash. And that consumer, that user's silver is going to scream, and we will hear about it.
Interesting. Does the user or consumer, is there rumblings of this? I mean, do people know about this? Have you been, you're in the industry, people talking about these rumblings?
I have not heard about it. What I have heard is In fact, just about a month and a half ago, a large-ish silver producer has told me that they sell part of their production to China. They sell part of their production to the West. And the Chinese are coming to them and they're saying, we really, really, really want the silver. We're prepared to pay you a couple of weeks in advance. And we're actually prepared to pay you $3 over spot in order to get our silver. We absolutely want our silver. So that to me is the best indication of the tightness in the market. It is severely tight, but we're just not hearing about it. And this is, it's these kinds of anecdotal bits of evidence that certainly point to it.
Yeah, interesting. What an analysis. Okay, let's get back on to the outlook because, of course, supply and demand should mean prices go up. And you've suggested, obviously, you have a bullish outlook, but you've projected potential climb to over $30 in the latter half of 2024. We're currently sitting around that $26.86. We're getting close, right? You probably were correct in there, but you've even positioned yourself maybe a scenario where silver could reach $300 US by 2030. So let's break this down. You may have been correct about the 30, but 300?
Well, 300, I mean, I know it sounds sensational, but when I got to that number, what I did was I looked at what had happened to silver prices in the past, and I compared it to other assets, important assets, hard assets typically, or stock indices, for example, large indices. And so a couple of examples.
We can't overlook the technical outlook when discussing the future trajectory of silver prices. As we delve into the charts and patterns, it's clear that several key resistance and support levels play a crucial role in determining silver's short to medium-term price movements. Let's break down these technical aspects to give you a clearer picture of potential market directions. First, consider the current technical setup. Silver recently tested a significant resistance level at $28.74, just shy of the psychological $29 mark, which if breached could pave the way toward the year-to-date high of $29.79. These price points are crucial because surpassing them could signal a strong bullish momentum, possibly giving credence to predictions of much higher prices. However, the formation of a shooting star candlestick pattern at the peak of recent trading sessions suggests that while the bullish sentiment is strong, there's potential for a short-term pullback. This pattern typically indicates a rejection of higher prices, which could lead to a retracement toward key support levels. The immediate support is found at the $28 psychological level, a pivotal area that bulls must defend to maintain the current uptrend's integrity. Should this support fail, the next critical level to watch is the 38.2% Fibonacci retracement at $27.70. This level, derived from the recent swing high to a significant low, serves as a potential turnaround point where buyers might re-emerge to buy the dip. If the price dips below this, it could test further down towards the $27 mark, potentially triggering a more substantial bearish phase. On the flip side, if buyers regain control and push the price above the recent high of $28.74, this could invalidate the bearish shooting star signal and set the stage for testing $29 and beyond. Such a move would not only reflect strengthening market sentiment, but also boost confidence in the sustainability of the upward trend. Moreover, the role of the Relative Strength Index, RSI, which currently hovers in the bullish zone between 60 and 70, cannot be ignored. While its downward slope hints at growing bearish momentum, its position above 50 suggests that the overall trend remains upward. This interplay between the RSI and price action offers valuable clues for traders and investors about potential shifts in market dynamics. In addition to resistance and support levels, it's also essential to consider the average trading volume during these price movements. An increase in volume at key levels can confirm the strength of the support or resistance, providing further insights into market sentiment and potential future movements. In the next segment, we will explore how global events and economic policies are impacting investor sentiment and consequently silver prices. Understanding these broader influences is crucial as they often dictate the strategic decisions of large-scale investors and can have a cascading effect on commodity prices like silver. So stay tuned as we connect the dots between technical analysis, economic indicators, and global events to give you a comprehensive view of where silver could be heading next. Remember, in the volatile world of commodities trading, being equipped with thorough analysis and a keen understanding of market
so that's economics 101. Exactly right, Jeremy. So, I had sort of a suspicion that if we had structural deficits and the price was really not moving And we had, it's not just 1 year or 2 years. It's been 4 years straight. We still have forecasts for these sizable deficits. We're talking well above 100 million ounces a year. So more than, say, 10 to 15% of the entire market, again, in structural deficit for the next couple of years at least. How is it and why is it that we're not seeing the silver price move? And I had this suspicion that industry, especially, which is the big consumer, is getting their silver somewhere, somehow, rather than from mining or from the recycling, which are the two main suppliers normally. Mm-hmm. And so if you look at, and so I did some digging, found inventory charts for the COMEX, for the LBMA, for the Shanghai, and over the last 3 to 4 years, each and every one of those exchanges has seen their overall silver inventories drop about 30 to 40%.
Wow.
And now that's just overall inventories. That's not what is supposed to be available for delivery. They've got something called registered silver, which technically, apparently, is what is available for delivery if you want to take delivery. And that's down 70% on 2 of those 3 exchanges. So I suspected, and still do, that you have large industrial users going to these futures exchanges, buying long futures contracts, and simply standing for delivery, going to the exchange and saying, okay, my contract is expired now. I'm entitled to take delivery. Here's the address. Here's where I want it shipped. And that's that. And so there's another aspect too, and that is the silver ETFs. And they have seen their inventories drop dramatically. I did some research on this, and there's some really interesting charts that I've put together. One looks at, you really kind of can look at one, which is the largest, which is SLV, goes back to 2006, the first of all silver ETFs, and the largest, has about $10 billion worth of silver. And if you look at how two aspects of SLV, you look at how the silver price has behaved, and you look at the number of ounces that are held by SLV. So going back to 2006, there are 2 periods where...
Turning our focus to global events, how do geopolitical tensions and economic policies worldwide impact silver prices? The demand for silver, particularly in industries like solar and electronics, is skyrocketing, reshaping its market fundamentals. Let's delve into how these factors synergize to influence the dynamics here in the silver market. Geopolitical tensions often lead to increased market volatility and a flight to safety among investors, which traditionally benefits precious metals like silver. For instance, tensions between major economies can disrupt trade flows and create uncertainty, prompting investors to seek out safe haven assets. In recent times, we've seen such dynamics play out with various international disputes affecting market sentiment and indirectly influencing silver prices through shifts in currency values and investment flows. Furthermore, the global push towards green technology significantly boosts silver demand. Silver is a key component in photovoltaic cells used in solar panels, and as countries ramp up efforts to transition to renewable energy, the demand for silver is expected to rise. This increase is compounded by the growth in the electric vehicle (EV) market, where silver is used in electrical connections. The expansion of these industries is not just a temporary surge, but a long-term driver of silver demand. Additionally, economic policies, particularly those related to fiscal stimulus and infrastructure spending, play a crucial role. For example, massive infrastructure plans like those announced in various countries to boost economic recovery from the pandemic often include significant investments in green energy projects. These projects typically require substantial amounts of industrial metals, including silver, thereby increasing its consumption. Moreover, let's consider the role of monetary policies set by central banks worldwide. Looser monetary policies, characterized by lower interest rates and increased money supply, can devalue currencies and lead to higher inflation rates. Such environments traditionally foster higher precious metal prices as investors look for ways to preserve value. Conversely, tightening monetary policies, if perceived as effective in combating inflation, might temper the rise in silver prices. Economic indicators from major economies also impact the silver market. For instance, strong economic growth in China, a leading consumer and producer of silver, can lead to higher demand for the metal for industrial purposes. Conversely, economic downturns or slowdowns in major economies can dampen this demand, influencing global silver prices. In our next section, we will tie all these factors together and explore how they collectively form a pathway that might lead silver to hit unprecedented highs, potentially aligning with Peter Krauth's prediction of a $1,000 silver price. Understanding these intricate connections helps us anticipate future market movements and provide strategic insights for those looking to invest in or trade silver. Stay tuned as we build up to our concluding segment, where we will draw all threads together to provide a comprehensive analysis of the potential for a significant increase in silver prices. Don't forget, insights like these are what can help you stay ahead in the fast-paced world of commodity trading. Be sure to engage in the comments below with your thoughts or questions, and hit that subscribe button if you haven't already.
On silver, if you looked at what happened during the silver squeeze of late January 2021, again, you could not get your hands on silver. I mean, there are stories, I talk about that in the book, where you have these bullion dealers just never witnessed anything ever like that. And then these are people who've been in business for decades. It's sometimes a second generation. They've never lived through markets like that. Their computer systems were overwhelmed. Their phone systems were overwhelmed, and they knew it was basically retail buying because it was mostly small orders. And they were starting to tell people, I'm sorry, I can't ship this in 2 or 3 days. I'm going to have to ship it in 2 or 3 weeks. And in India, for example, to the best of my recollection, some of the premiums, this would have been during the COVID pandemic panic, went up to almost 100% over spot.
Right.
So people really, really wanted the silver and were willing to pay for it. And I'm suggesting get involved when people are not excited. You will have the benefit of having access, getting delivery under reasonable times, being able to shop with peace of mind. You'll pay, as I say, reasonable premiums, relatively reasonable. They tend to, where normal premiums historically have been, say, 12 to 15%. If you're even at somewhere around 20%, I think that's attractive today. And I think you can probably find those kinds of premiums right now. So I think get involved now, buy a little bit at least to get your feet wet, get that coin in your hand, appreciate what it feels like, what it looks like. And I think you'll be sold and start building on it. Someone pointed out, actually, a subscriber pointed out to me something interesting. And I'm not suggesting people do this, but it is an option. And that is that the Royal Canadian Mint has its own version of a silver ETF, and the silver is stored at the mint. Well, not just their product, but others as well, will over time trade anywhere from discount to net asset value to premium to net asset value. And so this subscriber, these are the kinds of things that I know of, but I'm not constantly tracking. Yet a subscriber wrote to me and told me about this and said, right now this product is trading at about 12% discount to the silver price, and for the silver that's actually being held by this ETF. So I went and looked at it, and then I told my own subscribers about it, and I said, right now that's actually got worse. It was at 16%. So worse from one point of view, better from the buyer's point of view. You're actually buying silver at a 16% discount. So, these things don't tend to last. That's likely to correct, especially if you get people piling in and silver's making new highs, say 12 or 24-month highs. And that's one way. I'm not saying that's the same as buying physical silver. There is no equivalent. But I am saying that you can get exposure. You can get it quickly.
Interesting.
You can get it out. You can buy something like that, wait for it to reach NAV or net asset value, or wait for it to reach a premium to net asset value, then sell it and switch to physical silver. These are the kinds of things that people do, and the kinds of things I've talked about tactics you can use. Talked about that to my subscribers, and it's kinds of things people can take advantage of. It's certainly one way to gain exposure and
Turning
not
our
overpay.
focus to global events, how do geopolitical tensions and economic policies worldwide impact silver prices? The demand for silver, particularly in industries like solar and electronics, is skyrocketing, reshaping its market fundamentals. Let's delve into how these factors synergize to influence the dynamics here in the silver market. Geopolitical tensions often lead to increased market volatility and a flight to safety among investors, which traditionally benefits precious metals like silver. For instance, Tensions between major economies can disrupt trade flows and create uncertainty, prompting investors to seek out safe haven assets. In recent times, we've seen such dynamics play out with various international disputes affecting market sentiment and indirectly influencing silver prices through shifts in currency values and investment flows. Furthermore, the global push towards green technologies significantly boosts silver demand. Silver is a key component in photovoltaic cells used in solar panels, and as countries ramp up efforts to transition to renewable energy, the demand for silver is expected to rise. This increase is compounded by the growth in the electric vehicle (EV) market, where silver is used in electrical connections. The expansion of these industries is not just a temporary surge, but a long-term driver of silver demand. Additionally, economic policies, particularly those related to fiscal stimulus and infrastructure spending, play a crucial role. For example, massive infrastructure plans like those announced in various countries to boost economic recovery from the pandemic often include significant investments in green energy projects. These projects typically require substantial amounts of industrial metals, including silver, thereby increasing its consumption. Moreover, let's consider the role of monetary policies set by central banks worldwide. Looser monetary policies, characterized by lower interest rates and increased money supply, can devalue currencies and lead to higher inflation rates. Such environments traditionally foster higher precious metal prices as investors look for ways to preserve value. Conversely, tightening monetary policies, if perceived as effective in combating inflation, might temper the rise in silver prices. Economic indicators from major economies also impact the silver market. For instance, strong economic growth in China, a leading consumer and producer of silver, can lead to higher demand for the metal for industrial purposes. Conversely, economic downturns or slowdowns in major economies can dampen this demand, influencing global silver prices. In our next section, we will tie all these factors together and explore how they collectively form a pathway that might lead silver to hit unprecedented highs, potentially aligning with Peter Krauth's prediction of a $1,000 silver price. Understanding these intricate connections helps us anticipate future market movements and provide strategic insights for those looking to invest in or trade silver. Firstly, the technical indicators we discussed highlight a market that, while currently volatile, shows underlying bullish trends. The potential for silver to break through significant resistance levels could trigger a wave of buying that supports higher price levels. Moreover, if silver can maintain support above these critical levels during pullbacks, it further solidifies the market's confidence in a sustainable upward trend. Next, the economic indicators and Fed policies provide a backdrop of potential prolonged low interest rates and fiscal stimulus, which historically favor investments in precious metals. Lower interest rates reduce the opportunity cost of holding non-yielding assets like silver, making it more attractive. Furthermore, expansive fiscal policies, especially those focused on green technologies and infrastructure, directly increase silver's industrial demand, providing a robust foundation for its price increase. In conclusion, while predicting silver to reach $1,000 per ounce might seem optimistic, it is not outside the realm of possibility given the right convergence of technical, economic, and geopolitical factors. Remember, in the world of commodities, sometimes the unimaginable becomes the inevitable. As we continue to monitor these developments, keep this analysis in mind and consider how shifts in these factors could impact your investment strategies. Thank you for joining me in this comprehensive exploration of silver's potential path to $1,000. Don't forget to hit that subscribe button for more in-depth analyses, and let's keep the conversation going in the comments below. What do you think about silver's prospects? Could we really see it hit these heights, or is it a financial fantasy? Share your thoughts, and let's engage in a lively discussion about the future of silver and other precious metals.